Good afternoon to some of you in China and India and in other places. We've got quite an international audience here today. Thank you so much for joining us today for this session on regulation, data protection, R&D tax credits, and grant funding opportunities. My name is Surah Hussain, and I'm the Senior Inward Investment Manager for Innovation and Life Sciences at London and Partners. We are the business growth and destination agency for London, and it's our mission to create economic growth that is resilient, sustainable, and inclusive. I'll be guiding you through the event today, and I'm joined here by my colleague Koen, who's on the chat with you. Just a quick housekeeping note before we kick off with the presentations. Can I ask everyone to stay on mute until we come to the Q&A session at the end? And we have enabled closed captions so that you can read along at the bottom and follow everything what is being said. And this meeting is recorded. We are recording right now, and we will share the recording and slides afterwards with everyone. So it would be great if you could rename yourself to your name and company name by clicking on the three dots on Zoom next to your name. When you go onto the little screen, there's three dots and you can click rename there. So do put any questions throughout the session, because we've got, we're going through the whole session first and then the Q&A at the end, so that you don't forget anything. Please put the questions throughout the sessions on the chat. Koen, my colleague, is monitoring, and we will also share all the contact details for the speakers and ourselves, as well as some useful links on the chat. So keep an eye on it. So my colleague Koen and I, we covered the life sciences, health and AI sector at London and Partners. And we both work with companies from all over the world to make the case for London and support their expansion plans to our city. And we do that through providing advice on setting up relevant networks and connections to experts, which some of them are here with us today. And this is the third event of our series this month. So this is part of our AI and data in life sciences and health campaign, which we're running in partnership with MedCity, our partner organization, which is the cluster organization for health and life sciences in London. So Koen is going to share a link in a moment in the chat, so you can have a look at our report. It's really quite comprehensive about all the opportunities in London. You can save that for later, unless you want to read through 33 pages now. And I'll just give you a very short snapshot of some of the main points which makes London a leader in life sciences and AI. Actually, last week we had an event with a company called Huma, a London company, which recently raised $130 million to scale their digital health platform and further their research and improve care. And the head of R&D, Matt Arrell, has summed up really well the power of convergence in London as an end-to-end innovation and commercialization ecosystem with access to clinical, academic, and industry expertise, as well as investors and diverse talent that really all come together to accelerate technology and companies' growth. So what he said is that London has provided them with a test bed to enable the company, creating a solid infrastructure to expand in the UK and globally and launching in other geographies. So as a city and as an organization, London and Partners, we are committed to inclusive growth. So we want to see products and solutions that are beneficial not only to better, but also to more equitable health. London, with its diverse population, offers a great opportunity for companies to work with diverse health data and access to diverse cohorts for trial, which has a potential to result in technologies that work for all of society. And when working with data and AI in healthcare settings, there's a lot of regulation, of course, to be aware of, and which we will cover in our session today, and also some of the financial incentives of conducting R&D in the UK. So I'll show you just a quick recap on our agenda. Here we are. So we'll start off with the regulation part. And I'm really pleased to welcome our first speaker from Taylor Wessing Law Firm, one of our expert partners, in those matters. And we have Dr. Tasmina Goraya with us. And without further ado, welcome Tasmina, and we'll start off here. I go on mute.
Thank you, Sarah, and good morning, everyone. So I'm going to talk briefly about the regulatory system in the United Kingdom. So things to consider when you're expanding into London, particularly the new UKCA marking for medical devices. If I can have the next slide, Sarah. So this first slide just sets out some of the things that businesses need to consider when looking to do business in the UK. I'm not going to go into detail in relation to all of these points here. My colleague Vin Banch is going to be talking about the data and privacy aspects shortly, but as I said, my focus today is going to be on the regulatory system for medical devices in the UK. Next slide, please. So starting with a little bit of geography. So the United Kingdom is made up of essentially 4 nations, England, Scotland, Wales, which form Great Britain, and Northern Ireland. So prior to Brexit, the regulatory regime for medical devices was a single framework in the United Kingdom, which was essentially that which was in the European Union. Post-Brexit, we now have, for the purposes of medical devices, essentially 2 jurisdictions in the United Kingdom, Great Britain and Northern Ireland. And that's partly because of the Northern Ireland Protocol, which formed part of the Brexit deal. So under that regime, under those rules, Northern Ireland remains aligned with the European Union. So the European Union medical device regulatory system remains applicable in Northern Ireland. There is aspects of the UK regulatory system, namely the UK NI system, that also applies in Northern Ireland, which I'll talk about in a little bit more detail as I go through this talk. In respect of Great Britain will still continue to recognise the CE mark under the EU medical device regime until the 30th of June 2023, so that's the good news. But that is at the discretion of our regulator, the MHRA. So the MHRA can turn around and say, even though the product is CE marked, it's not going to be allowed on the UK market or for particular reasons, particularly the GB market, should I say. And there is that new regulatory system, the UKCA mark, which again, I'll touch on in this talk. Next slide, please. So points to note for Great Britain, so England, Scotland, Wales, is that the new MDR, the medical devices regulation, which applies in the European Union, as well as the in vitro diagnostic device regulation, the IVDR, will not apply when in Great Britain. So some of you may know that the IVDR does not come into application until May next year, but the MDR is already in force as of May this year. So as I mentioned, CE marked medical devices can continue to be placed on the Great Britain market until June 2023. There are registration requirements in both Great Britain and Northern Ireland for medical devices, and I'll talk about the grace periods and the deadlines for those shortly. A very important point to note is the requirement of the UK responsible person if you're marketing your products in Great Britain. That requirement essentially mirrors the requirement of an EU authorised representative and is required for all manufacturers who are not established in the United Kingdom. That entity or individual, the UK responsible person, can be either. It's probably preferable to have a legal entity as your UK responsible person to ensure continuity of that role. That was mandatory as of the 1st of January 2021. So if you have not got one already and you are selling your products in Great Britain, you need to appoint one now. And we've helped a lot of our clients put in place the mandate, the agreement that you need between the manufacturer and the UK responsible person. So do reach out if you need some help there. So onto the new UK CA regime. Sarah, if I could have the next slide, please. Okay, so this slide just basically sets out some of the main points. So I've already mentioned the UKCA system becomes mandatory as of the 1st of July. Until then, it's voluntary, so you can actually undergo the relevant conformity assessments and UKCA mark your products now if you want to. But it does not become mandatory until the 1st of July 2023. The system is currently based on the 3 EU medical device directives, which have been transposed into UK law already. A point to note is in the EU, you now have the application of the MDR, the EU MDR, the Medical Devices Regulation, which is not applicable in Great Britain. So there is already potentially that divergence between the GB system, so the UKCA marking system, and the CE marking system. Another point to note of the new system is the creation of the UK approved body. Now this role, some of you might be familiar with the EU notified body role. So the notified body is an independent body which undertakes some of the conformity assessment aspects, roles for CE marked medical devices. So you undergo a conformity assessment before applying your CE mark. So notified bodies are generally required for class 2 medical devices and above, and some class 1 devices, for example, those which are sterile or have measuring functions. That role in the UK is now called the UK approved body. So you need to think about whether you need to appoint a UK approved body for your medical devices if you're going down this UKCA mark route. If you've already got a CE mark with a EU notified body, you don't need to consider that just yet, unless you want to voluntarily go down the UKCA marking system now. Another bit of good news is at the moment for labelling requirements for Great Britain, there's not much to do at the moment. So going forward, there will be. If you want to dual mark your products in the UK, so CA and CE mark, you can, provided that the product meets both requirements. The UKCA mark is not recognised in the EU, EEA or Northern Irish markets. But again, there are subject to EU rules. You can dual mark your products. So you can have both the UKCA mark and the CE mark on your products subject to the EU rules that apply. So there's some specific rules about dual labelling on medical devices. The UKNI mark is a special mark for the Northern Irish market, and it's never applied on its own. It's only really used where the conformity assessment body, the authorised representative, the notified body, is a UK notified body. In those cases, the products have to be CE marked with a UKNI mark. The important point to note there is because the conformity assessment body was a UK conformity assessment body, those CE UKNI marked products cannot be put on the EU market. They can only be put on the Northern Irish markets. The UKCA mark itself is not valid for Northern Ireland as well. So going forward, you need to think about labelling requirements, the conformity assessment routes that you need to undertake for your products if you wish to market in the United Kingdom. Next slide, please. So this slide sets out the grace periods for registration. For this is for Great Britain. So I've set out there the types of devices as well as the grace period that applies for them. So and the grace periods vary according to the risk profile of the devices. So the higher risk devices need to be registered first with the MHRA. You can register a number of devices at the same time. Point of distinction with Northern Ireland is that class 1 medical devices and general IVDs, they need to be registered with the MHRA for the Northern Irish market by the 1st of January 2021, so a year earlier than Great Britain. So if you're thinking about both markets, so selling medical devices in Northern Ireland as well as Great Britain, you need to also think about the registration requirements as well. As you probably know, for the EU, under the medical devices regulation, there are also transparency and regulation and registration requirements under that legislation, and that's contingent upon the UDAMED system being set up by the European Commission. And I think that is it for me, and I believe that we are taking questions at the end rather than now.
Thank you very much, Tasmina. Yes, if anyone has questions already, please put them in the chat so you don't forget about them, and we'll pick them up at the end. Thank you very much, Tasmina. I've actually taken lots of notes, so this is great. Thank you. And I'm handing over now to Katie Rabinjan from BDO, our accountancy partner, and she will talk to us about the benefits of being in the UK for R&D tax credits as well as grant funding opportunities. Over to you, Katie.
Thanks, Sora, and thanks, Tasmina. That was really interesting. I've learned an awful lot that I didn't know before about medical devices and the regulatory requirements, so thank you. So hopefully there's lots of people sitting here in this audience today thinking that London could be a location for your business going forwards. And so what I'm going to talk about are the state sector finance opportunities that can be a major factor in that decision making. And I know, because Sora can speak at length, all the other decision making factors, including the talent, the location, the number of partners that are here to collaborate, but we're going to spend the next 15 minutes talking cash. We're going to talk about, if you choose London as a location for your business, what are some of the kind of cash triggers and tax issues that are going to be faced? So I'm going to start with a UK R&D tax reliefs. These are well known and understood, have been around a number of years. So if you're sitting in a UK business, I'm hoping this isn't new news. If it's new news, we've got some great news this morning because we've probably got some cash for you. I'm going to take about the UK patent box regime, which is the follow-on effectively from R&D. So if you've done some R&D, developed some IP and knowledge, what next? I'm going to talk about government grants because these can be a source of early funding, which is really useful for businesses at early stage. They can be used in later stage, and I'll talk about the variety on offer and the differences. And finally, I'm going to talk about international collaboration, because if you're coming to the UK, it's in all likelihood, your business will be international already. So you'll probably have some operations in UK and other parts. And there's some, as anyone who's ever gone internationally knows, the international tax system can get quite complicated quite quickly. So we're going to talk about some of the interactions and important factors. So if I head to the next slide, I'm going to start with the good news about UK R&D tax relief. Can we flick on to the next slide, please? Perfect, thank you. So where companies have qualifying R&D activities, they can claim cash back from the UK taxman. Oh, sorry, go back one. Don't know quite what's happened. We've got a bit of delay. This is quite fun, isn't it? So profitable businesses. So if you come to the UK and you're immediately profitable, firstly, that's a great commercial situation. You will be subject to UK taxation. R&D tax relief will give you a reduction in the amount of UK tax that you'll pay. So this slide shows for every a percentage basis of qualifying spend. So if you spend £100 on qualifying R&D and you're a small or medium enterprise and you're profitable, you'll get additional tax deductions worth £25. So it's a useful position to be in. If you're a loss-making business, so let's say you've come to the UK and actually those first trading years, typically there are a number of costs mean you're in a loss-making position. R&D companies can reclaim cash back from HMRC. So they will actually pay money into your bank account worth up to 1/3 of the money that you spent on R&D if you're a small or medium enterprise. Now, as I said, the UK tax system can be complex. We have two schemes of R&D tax relief. One is for small or medium enterprises, that's the left-hand column here, and one is for larger businesses. And a rule of thumb here is if you have fewer than 500 employees, you're probably in that left-hand space. That can be further complicated by who your investors are. Like, do you have to look at your shareholders when you look at whether you've got fewer than 500 employees, and the type of work you undertake, particularly whether that's on behalf of somebody else or it's your own R&D. And But regardless of that fact, these cash incentives can be very valuable, particularly to early stage if you're setting up in UK, and making sure that the costs and spend you have in that UK company are eligible for this credit is quite important, and knowing that up front. So if I flick to the next slide, what I thought I'd do is just talk to you about what do I mean when I say R&D, because everybody has their own definition of research and development. The good news, if you're coming from another country, is that the definition of R&D for tax purposes is typically very similar internationally. So we have common principles, at least, with the US scheme of R&D tax relief, the French scheme, and various others internationally. So the core principles are likely similar. So the first point is you need to be making some kind of scientific or technological advancement. You need to be seeking some type of scientific or technological uncertainty, and you need to be doing that using a systematic approach. And all that means is you're not stumbled across something without trying. You've got a project plan that you're working to. And I'd expect every business in that sort of AI and data health space, probably if you're doing something that you think is research, it probably meets these criteria. So it's worth looking at, what are you going to place into the UK? So is that the research, or is that a marketing function or sales function? And if it's going to be innovation focused, making sure that the activities meet that UK definition and that your qualifying costs are identified up front. Then you can access the cash that I talk about. So if I flick to the next slide, I'm just going to talk a little about what the process is. How do you access that cash, and what needs to happen? Well, firstly, an R&D tax relief claim is submitted together with your corporation tax return in the UK. So if you set up in the UK, typically you would you could set up as a limited company, or you may have a branch or another entity subject to UK taxation. That entity or UK company will need to file accounts. So you'll need to explain to the, you will need to prepare and file a set of accounts showing what you've achieved. Those are typically filed for a year, or you may have a short period if you arrive in the UK prior to your normal year end. So you would need to prepare accounts, and alongside those, a UK corporation tax return, which sets out what your UK tax position is. Your R&D tax relief claim goes in with that tax return. Now, it doesn't need to have to go in the first time. You can amend a UK corporation tax return, and that claim, but the claim must be made within 2 years of the end of the accounting period. So you've got some admin to do, and you've got some time to wait, because you have to arrive in the UK and have completed that period before you can reclaim your cash back. The good news is that if you're claiming under the small or medium enterprises scheme, the UK tax authorities do seek to try and pay out the cash amounts within a month of you submitting that claim. So many UK businesses will seek to file accounts quickly, prepare tax computations quickly, and have their R&D claims submitted quickly after their year end, so that that clock can start in order to get the cash. The interaction between UK R&D tax relief and the other grants that I'm going to come on and talk about is very important. And that's because the UK SME scheme of R&D tax relief is really generous, giving you 1/3 of your qualifying spend in cash. Because of that, it qualifies as an EU state aid. And now I know that the rules on this will be changing, but at the moment that's still the criteria. That means you can't have 2 notified state aids on the same project. So if you choose to claim a grant in respect of one of your projects, you're ineligible for that 1/3 SME spend. You can still claim under the large company scheme, so you will still get 10%. So they can be combined in a way that works. But just before you jump in and apply for a grant, it's always worth standing back and saying, would I be better making a claim under the UK R&D tax relief scheme? And I'll come at the end to talk about the differences. And then finally, consider that international interaction. And I said I'd talk about some of the factors involved. One here is that the different R&D tax regimes internationally can be used together. So there's some instances where, because of the rules of the different regimes, there may be costs that you incur in one jurisdiction that can be claimed for R&D tax relief in two. So you can get a benefit from cash in the UK and cash in another jurisdiction as well. That's why I say planning carefully and understanding what expenditure is in which jurisdiction is important. Okay, so if I flick on, I've talked a little bit about how we compare internationally, and this next slide shows how we compare to our European neighbours. And I'm just going to pick out some of the other countries which have an R&D tax relief scheme, so you can see the difference in rate. Now, the UK colouring here represents the large company scheme rather than the SME one. So you've got to imagine that's a sort of slightly brighter and higher colour if you're in the SME regime. But when you compare us across Europe and France, you can get cash refunds up to 30% available on qualifying expenditure up to 100 million euros. In Ireland, cash refunds up to 25%, and Spain and Germany are the same at 25%. So you can see that if you hit that large company rate of relief, we seem a little bit lower, but actually under the SME scheme, we are more generous than some of our near neighbours in terms of R&D spend. And it is important to note that UK R&D tax relief is actually under consultation at the moment. With Brexit, the UK is really starting to look at how do we put ourselves on the world stage in terms of attracting the types of businesses that you will work in. We want the UK to be an attractive place, and because of that, we're revisiting R&D tax relief to see what more we can do to support businesses such as yours choosing the UK. So if I move on to the next slide, I'm going to briefly talk about the follow-on from UK R&D tax relief, and that's Patent Box. So why is Patent Box important? Well, once you've commercialised your IP, you hopefully will be making a profit from all of that R&D activity that you've undertaken. The UK main rate of corporation tax is currently 19%, and that's going to be rising going forwards to 25%, which is quite significant cost to any business. What the UK Patent Box regime does is reduce that to an effective corporation tax as low as 10%, which is a really competitive rate compared to other tax regimes and even areas you consider tax havens. So it's important to think about UK Patent Box because some of the criteria are quite restrictive in terms of where that R&D work can be carried out. It's really important that the UK has a role in the R&D activities and doesn't just kind of transfer that IP from another jurisdiction. So making sure you meet those eligible criteria will mean that going forwards in the UK, you'll be looking at a 10% rate of tax rather than a 25% rate of corporation tax, which can be really important in keeping cash in the business and attracting investors. It's quite a mechanical process to make a claim for a Patent Box, and there are various adjustments made. It's not as simple as saying, here's my profit and I'll tax it at 10%. That would be way too simple for a tax regime. Instead, what's done is an adjustment for what's called a routine return. So the profit HMRC would expect you to make on the underlying cost you've incurred, and a strip out for brand. Now, for a lot of early stage businesses, that shouldn't cause any concern. But if you are an Apple or Samsung coming into the UK, there's a lot of weight given to brand, and those profits are separately taxed. You do need to own a qualifying patent or similar right. And I'm aware that in the AI and data space, this can be more tricky because you're not necessarily looking to patent what you have created. There are ways to patent software if that's in your business, because software in the UK Patent Box isn't a qualifying right at the moment. So the copyright, for example, doesn't fall into this, but it is worthwhile looking at, could you patent and how would you go about doing that in order to access this tax rate? Okay, Sura, so I'm going to talk briefly now about the UK grant funding process. So if you are landing in the UK and want cash more immediately, there's an application process typically in putting a grant proposal together. It is important to find the right partners and be really clear on what you're trying to achieve with your project, because the application process can take a number of months, and that clarity and definition is really important in terms of getting that right. You then submit that proposal. Again, it takes a while for that proposal to be assessed by expert evaluators. And then there's an approval process that will take you through various financial checks and making sure that the maximum amount has been agreed. Once the application's passed through, you can typically make claims for the cash as you're going through your project. So they would go maybe on a quarterly basis, depending on the type of grant that's involved. So over the next couple of slides, and I'll allow you to read these for yourselves, I've included some various grants that are available to support innovation and to support this sector. Hopefully you can go forwards. One issue that we have with grants are the success rates, and you really should be aware of this. So the last published success rate, for example, for UKRI grants was 27%. So that was 4,700 successful grants, meaning over 17,000 applications were made. So I think that demonstrates the really competitive nature of some of these grants within the UK. And that means that typically businesses who are focused on innovation have to make a strategic decision. Do we take away business time to apply for these grants? Because you need to really focus on making your application as good as it possibly can. Or do you make the strategic decision to focus on the business and not try to go for the grants? So it is a decision point for many. There are lots of businesses we help who gain a lot from the grants that are on this slide. But there are businesses that choose not to do so. And I think there were some updates to this slide. So hopefully in the pack that you receive later on, you'll receive some further information about that Horizon UK as well. So the last thing to say is that there is help out there on grants. You know, whether you need some support on that initial assessment to work out which grants are we eligible for, which do we stand most chance of getting and how to apply, to writing the full grant application process. So we can help at various different stages on this. So if you're thinking about coming to the UK and wonder what grants are available, we can help from that right through to writing the report and making the submission for you. So if we head to the next slide, I've just compared here the difference between R&D tax relief and innovation grants. So R&D tax relief, you qualify if you meet the criteria. It's self-assessed and it just talks about R&D work that is new to the company. So activities that haven't been done before. Claims are made backwards facing and they're sector agnostic. So it doesn't matter which part of the, which area you're exploring, so long as you're looking for scientific or technological advancements and uncertainties. And you get that lump sum payment worth between 10 and 1/3%. Grants instead are more competitive. It needs to be something completely new to the industry and tends to be forward-looking, which is helpful. So my last slide just talks about some of the impact of various international collaboration. So I think you do need to look at who are your investors going to be? What's the contractual position going to be between your various international parts of your business? Who's going to own the intellectual property and who's going to bear the risk? And some of these, figuring out the questions and answers to some of these commercial issues can really impact your tax position. Thank you, Sarah. I'm sorry for running a couple of minutes over.
That's okay. Thank you so much, Katie. That was really interesting. I've written down a few questions for later. And last but not least, I'm handing over to Vinod Bunch from Taylor Wessing, and he will talk to us about what to consider when working with data internationally and the regulations in the UK. So over to you, Vin.
Thank you very much, Sarah. And hello, everyone. Sarah said, I'm Vin Banj. I'm delighted to be supporting this London and Partners event today, alongside my colleague and partner, Tasmina, who you've already heard from, and also the excellent presentation from Katie and our friends at BDO. So I have really just a matter of minutes to try and cover the topic of data and GDPR. This is an enormous topic. But I'm going to try and give you an overview and try and just focus in on some of the key points you need to be aware of and really introduce how this does impact on what you're doing and what it means if you're coming into the UK from that perspective. First, let me just try and clarify what the prevailing law is, because we've had some twists and turns as far as data law and GDPR is concerned. I think, you know, if I think back maybe 5-10 years ago in particular, hardly anyone knew or understood what the data protection law was, particularly if you were just not used to the European regime. Things have changed hugely because of GDPR. And I know as I travel in so many different countries and talk to our clients across the world, almost everyone has at least heard of the term GDPR, and because that is essentially the new prevailing law that we have. The old law was pre 2000. In fact, the old law dates back to 1995. And that's when we had the European Directive on Data Protection, which all the European countries at the time, all the EU countries, including the UK at the time, had implemented locally. So we all had a national law that sought to implement the 1995 EU Directive. But it became quite clear about 10 years ago that this law just wasn't really fit for purpose, mainly because we'd seen so much change because of technology, so much change to business models, so much change to innovation. And you have to remember that old law was pre-Google. It was pre-internet. It was pre-outsourcing, pre-shared services, pre-cloud. So GDPR was long overdue as a law that was going to try and update itself. So the concept of GDPR is essentially to build on top of the old law. So a lot of the principles that we'll see, and I'll look at those in just a moment, are very familiar to what we had, but there is more than the GDPR. It's very much the old law plus. Brexit has naturally had a consequence, with the UK no longer being part of the EU bloc. Therefore, the GDPR as an EU regulation no longer was written into the UK statute book. So what we have, though, is we had plenty of discussion and debate around whether the UK would continue to adopt the same benchmark that GDPR offers across the rest of the EU, and certainly as that applies to those additional countries that also seek to adopt the same regime, in other words, European Economic Area. And the answer to that very clearly was yes. So what we're left with post-Brexit is, in effect, the Data Protection Act 2018, which came into force and fully enacted in 2020. And in effect, you should look at it as a UK GDPR. So very familiar, very similar to what we see in the EU. And also, therefore, you'll have some of the same considerations if you are an international business. And if you are an international business, you also have to think about the extraterritorial impact of GDPR, whether that's UK GDPR or EU GDPR. For example, if you are offering your services and goods into the UK or even into the EU market, then you'll need to consider, and you most likely will need to have an authorized representative appointed. And there is a protocol around that. Of course, post-Brexit, you will need a UK authorized representative as well as an EU representative if your goods and services are also targeting those EU member states. We used to have a registration process, which was almost seen as an informal licensing process in the UK. That has disappeared. GDPR got rid of administrative registration requirements. But the reality is we still have a form of registration requirement in the UK. So the Information Commissioner's Office, the UK regulator, will still require businesses to consider whether they need to pay a fee. So there is a fee system payable, depending on the size of the business and the size of your operations. It's a fee that is actually quite one that recognizes that businesses of a different size should not be hindered by a registration fee as such. And there is a sliding scale. So most businesses, small to medium, will pay either £40 per year or will pay £60 per year. If you're a larger business, and we're talking when you get to the stage of hundreds of employees, turnover well into the 25, 26 million plus bracket, then you might have to pay 2,900 for the larger business fee scale. But other than that, there is no licensing regime and there is no pre-authorization regime in the UK. The regulator is there to regulate, to watch, to intervene, to ask questions, to assess you, but also to uphold complaints when individuals think you're not complying with the GDPR and the data protection regime. So what is that regime? In the next slide, I try and summarize quite a lot of information for you, but let me again try and just give you that helicopter view so you can understand what it is what we're trying to do here. As always, GDPR is about rights and obligations, and it always has been about rights and obligations. And you'll see those obligations are largely in the principles, and you'll see those rights I've summarized for you there. And these are new rights and enhanced rights under the GDPR. So individuals about who you're processing personal information. And it's very easy to trigger the definition of personal data, of processing personal data. It's very difficult to de-scope data these days. Not impossible, but difficult. And so what we have is, under the GDPR, a framework of principles, and we have rights that you have to observe and make sure that the individuals to whom your data relates to can exercise those rights. The big difference to GDPR is this central column, where there is now a frontline compliance requirement, which didn't exist before. So it's meant some of the paperwork and some of the accountability, some of the documentation, which often was seen as maybe best practice before, is now actually baked into the legislation. So by and large, if you breach the principles on the left-hand side, you could be hit with a fine of up to 4% of your global annual revenue. If you breach the compliance obligations, so even if you actually haven't done anything wrong, but you cannot demonstrate that you've addressed compliance, then you could be hit with a fine of between 2 and 4% of revenue. So GDPR is designed to make you think about how you process data, make you think about the principles that apply in terms of the data asset that you have. And if you address these points, what the position you will end up with is you'll be able to not only demonstrate compliance, but also preserve as much as you can the robustness and the value of your data asset, and your ability to commercialize the data asset, and your ability to operationalize and grow revenue from it. And that's the big takeaway here, because if you don't get the compliance right, then you'll find that, for example, an individual's right to access their data, an individual's right to rectification, an individual's right to erasure, to almost say, I don't want you to process the data, can have a far greater impact than if you weren't prepared for this, and would otherwise have the strong potential to erode your data asset and your ability to operate and transact that data for your services. Just touching on a few key points quickly. The principles, you would have seen some of these already. If you're familiar with other regimes around the world, some of these are already influencing other data protection regimes around the world. If, for example, you're familiar with the regimes in Singapore, the PDPA has a lot of familiarity with some of the data principles that you see here. The slow but advancing data protection law in India will also have a lot of familiarity around the principles that you see here, and also in other economies like Australia and Korea. Again, a lot of familiarity. A lot of those regimes have sought to implement something that is more towards GDPR. But this means that you have to think about what data you hold. You have to think about why you hold it, to be very clear about purposes. You have to be transparent about those purposes. That's why we have privacy policies. You have to be very clear around what protocols you're going to put in place if you're going to share that data with another party, and within those data sharing arrangements within your ecosystem. And I know how important ecosystems are to this sector in particular. Data sharing protocols have a very important role to play. So everyone is aware of the framework of compliance that applies to you and is flowed down across the organizations. So it may be something that you'll find is flowed down to you in a contractual arrangement, or you might have to take hold of this and actually force it through onto the parties that you deal with as well. So the frontline compliance obligations here are actually very, very important. The fundamental one is the record of processing activity with ROPA. This means basically that you have to go through your data and in effect audit it. You have to demonstrate and document what data you collect and be very granular about it, the purposes for which you specifically collect and process it. And then you have to show how you legitimize that against what's called the lawful basis within GDPR. And they can be, in certain cases, quite restrictive when you're processing what's called special categories of personal data or sensitive data, as we used to call it. This effectively covers health data, or almost any data within life sciences, because of its very nature, obviously relates to health or information about someone's health. And even data that, for example, relates to genetic information or biometric information is not only personal data, but special data, and therefore there are higher obligations. So that's not to say you can't process it. It's not to say that you can't handle it. The regime in the UK is actually quite a balanced one. It's a tough regime as far as data regimes are concerned, but that's often seen as an advantage on the global scale. More and more countries around the world, as I mentioned earlier on, are adopting data laws, and they're seeking to adopt data laws, which in the vast majority of cases aspire to be like GDPR, and some cases go slightly higher in certain obligations and in certain ways. So being able to demonstrate that you comply with the GDPR baseline will no doubt be helpful to demonstrate compliance in other countries as far as you internationalize your operations as well. And compliance, you know, and I've covered this in just a few moments, which in some ways doesn't do the topic justice. It seems like it's a heavy burden, but actually, if you go through it methodically, which you have to by law, then you can use compliance here as an enabler, because if you don't, it will drag your operations. You will have counterparties in your ecosystem asking you questions which you won't be able to deal with. It may block, in some cases, what you're trying to do, particularly with the data, and therefore you'll find that actually it can really drag and disrupt your business model. So compliance can and should be seen as an enabler. It has to, because otherwise the impact can be quite hard hitting. And it's important, just as I finish, that the UK regulator, which I mentioned, the Information Commissioner's Office, used to be seen as a soft regulator. And that's changed a lot. That's not to say it's become overly tough, but actually it's still a pragmatic regulator. They will come down hard and they will issue heavy fines where there's been serious breaches. They want to support businesses, and they have a lot of guidance on their website as well. And especially if you show that you want to embrace this framework. The other aspect of the UK ICO is it's very much pro-innovation. And that sets it apart from many other regulators across Europe. It understands innovation. It understands data-rich sectors like technology and absolutely like life sciences. So, for example, and this is probably just a point I'll finish on, is if you find that your product is highly innovative, and highly innovative products often create a little bit of tension as to how you adapt and ensure that they are GDPR compliant. You can talk to the ICO, and we help a lot of clients have that conversation with the ICO. And the ICO is very sympathetic to discussing and understanding and working with you, particularly when they feel that you want to be a collaborator and an enabler of GDPR. And they also have regimes such as the sandbox regime as well, which they run twice now. And so if your model is very innovative, they will allow you to run with that model within a sandbox environment. And that's very, very helpful, particularly given the innovation that we see in this particular sector. So I'm sorry if I feel like I've rushed through such a large topic, but hopefully that was a useful introduction. And as Surya said earlier on, there is time for questions, and I'd be delighted to answer questions alongside my fellow panelists today. Surya, back to you.
Thank you. Thanks very much, Vin. We also, I